Hello and welcome everyone to Gold Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into the middle of the week here, what do you need to be aware of? Well, as we discussed on the week ahead commodity report and also updated you on last week on the FOMC statement where we were banking profits on the breakouts that we got back towards the swing highs for both gold and silver, we have taken this opportunity now on the sell-offs at the beginning of the week to then establish positions again at lower opportunities here. So essentially buying at the lows here. So we have, of course, now seen this follow-on move following on from last week's FOMC statements where we mentioned to you on both gold asset of the day and silver asset of the day that we would look at opportunities on silver back down towards $25 per ounce as great areas to look at for buying evidence. And also on gold, if we were to drop back towards 1700s, that would also be a great opportunity to build further positions. So as you know, last week we banked 1,290 points on gold on the FOMC statement, just below $1,750 per ounce. Also, we banked silver above $26 per ounce last Wednesday, and then we've reloaded on the sell-off that we've seen on silver back down towards $25 per ounce. Now we are still expecting this continuation of range-bound price action. We have seen on Tuesday the US dollar up over 0.5%, breaking out towards 1 month highs. We've also seen the gold to silver ratio rally as well, which essentially means that gold is likely in the short term to outperform silver. Now we've also seen with dollar strength on Tuesday, energies have sold off 5%, and we've also seen a corrective move on the stock market as well. So with this, we have seen liquidations, we've seen capital flow out of many of the markets, and with that, the dollar's been propped higher, and you've seen corrective moves on the precious metals, which quite simply is again another reminder to keep locking in profits. It's not a buy and hold market at the moment. Very simply, you want to keep coming in and out of the market. It is a trader's market. Day to day, we're seeing quite a lot of volatility, up and down price action. So just keep locking in those profits. Now, as we get towards the end of the week and then as we move into next week, it's worthwhile being aware that next week is going to be the end of the quarter. Not only that, we've also got contract settlement on the Monday for the metals. And then next Friday, we have non-farm payrolls and also Easter, which will be celebrated by many countries. So again, I am expecting more volatility going into next week. Some really great opportunities as you do see very specific capital flows as you get towards the end of a quarter, and then moving into a new month, which will be from Thursday onwards next week. We'll be moving into the second quarter. So there are some very specific cycles moving into April that you definitely want to be aware of, particularly on the metals here. So again, commodities, they don't move up in a straight line. They will zigzag. You want to take the breakouts as opportunities to bank profits. Then when you get the corrective price action like we're seeing at the moment, this gives you the opportunity to buy back in again at much lower prices, just taking advantage of the range-bound price action that we're seeing at the moment on the commodity markets. As you know, trading commodities, it is a zero-sum game. So essentially, there always needs to be somebody on the other side of your trade. The majority of the time, it is the technical traders in the market using their outdated technical strategies and using indicators which are gimmicky and just don't work that are losing the majority of the time in the market. And it's the professional traders, the hedge funds, the institutions, the banks that are making the majority of the money in the market. And you want to be utilizing the same approach in the market, a research-driven approach which will give you an edge. You want to be utilizing market intelligence, data, awareness of capital flows, understand the daily, weekly, monthly, quarterly cycles for commodities, the very specific drivers and events that propel commodities higher and also lower as well. On top of that, understand the intermarket correlations, the ratios in the market, capital flows, the seasonal plays, and of course key areas of liquidity, as it's just as important to know when to bank your profits as when to enter into trade, and also have an awareness of what the hedge funds, the money managers and banks and institutions are doing in the market. This will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.